Hello everyone, and pretty much across all markets today we saw a blanket knee-jerk response to that big jobs number in the US on Friday, but there is other data out in the US on Friday that wasn't so positive. And so I think we should take things with a grain of salt, particularly as a lot of those numbers in terms of the strong new jobs creation was still that impact of schools opening up across the country, school teachers going back to work, school staff going back to work, and of course none of those are new jobs. So it's not new job creation that needs to be celebrated, it's just really relief that things are getting back to a little bit sort of more like normal in that sector. Of course, we know the US is facing a massive surge of Delta, and it is hitting vaccinated states as well as the unvaccinated states. And when people talk about unvaccinated states, for instance, in Florida, 20% of the cases, California, 20% of the cases, but the rest of the United States has 60% of the cases. And in the situation of Florida, 50% of people are vaccinated. So it's not as if there's no vaccination, it's 50% and they're still having a massive surge. China is seeing a big uptick as well and instituting tougher measures on movement. So the whole world is impacted by this, and some nations, as we know, like Indonesia, are just suffering immense pain and tragedy, as India has and elsewhere in the world. And there's a new Peru variant. But okay, enough of Delta. In terms of data today in China, we got inflation and producer prices. Inflation moderating nicely, as you can see in the chart there. And really, that's a very good outcome for China. When we look at the 25-year chart, we can see that this is a very moderate sort of inflationary period for China indeed. And we know that their trade situation has continued to be rather vibrant. So that suggests really all of Asia is experiencing a more vibrant trade period now. And I call that intra-regional trade. And that remains a strong growth engine for global growth generally. But on the inflation front, very much moderating. Then again today, we've got producer prices in China, and they are very strong, even by historical factors, as well as, in the 25-year chart just there now, you can see that these are very high producer price rises. And in the more recent chart, the 1-year chart there, you can see also that continued firm pressure to the upside in producer prices. So something has to give here. It's probably not that producer prices are going to fall back, so it's either that inflation is going to stabilize and kick higher, but I think the more likely scenario is that we're going to have higher input costs, but still competitive pricing in the domestic Chinese economy, which means inflation will remain low even though producer prices are going up, and companies will experience a bit of a squeeze on their profit margins, but one that they can cope with. And I think that is the most likely outcome of that situation there. Now, everyone saw gold turn down today, and I've had a lot of inquiries about gold, which of itself suggests that not only me, but we were all long gold, and that was a really big move. Particularly Monday morning markets can be very sort of thin, and perhaps some price makers have an opportunity there to price the market more severely than it deserves. I think that may have been the case in gold today. It has had a rebound, as most markets have. I tend to still favor gold. Buying on the dip in a small amount, given the volatility, is probably a good way to go with gold. However, the platinum situation could be a little bit more of a medium to long-term sustained downtrend, or heaviness at least, and I think that will be the case with a lot of commodities, as I expect the US dollar to continue strengthening, and I would buy US dollars against the Australian dollar certainly, and I would buy US dollars against oil certainly. I still think oil has already made a major long-term top, and it's just in its final throes before it really starts to fall away in a sustained bear trend for a period of time. That's all from me, Clifford Bennett, Chief Economist at ACY Securities. I hope you enjoy your Monday, and I hope you enjoy the rest of your week. Thank you.